Traders, good morning. I hope we're all here and the day is good. The day is bright. It's bright and clear. So let's see what we can do today together and make things work for ourselves. That's in terms of trading. My name is Olusegun and I'm going to be your host for today, Friday. So we have a couple of hosts, since Monday up to today. And I hope that you have been able to make some money for yourselves individually, collectively. So we're going to be looking at what we can do together today as a, how do I call it now? As a trader, okay? As someone that loves to trade and of course, make money together. So I'm going to be sharing my screen shortly. I want to welcome you all. So I'm seeing some couple of guys in the house. I want to see if I can mention some names. Dewumi, Benjamin, Celestine, Chinedu, Eguasa, Ekpemsi, very good name, very Nigerian name, right? That kind of name, like Ekpemsi, it will be difficult for people like Oyinbos from America to pronounce it. That's what makes African tick, Uko, Engineer Abdus, Olide, Femfon, right? I think your name is Femfons. Grace, Ada, Ibe Kanu. Those are good names. Those are Nigerian names. I don't want to call Nokia C21, not to concern me with that one. Paul Nicholas. I don't want to call Paul. So that I call, I can't even call any name here. All of them are foreign names. Paul, Nicholas, Abraham, they are all foreign names. Okay. Let me begin to look for all those African names. Sheung, Shuaib, Ibrahim, and of course, who else is there? Those are the names I can see for now. And I hope that you all are good wherever you are. So, how has your week been since Monday? I think I left you guys on Monday. And of course, I'm just coming back now. So, let me just log into my account very fast and then share my screen as quickly as I can. Okay, so and then we can look at what to do together. So, let me click on share. All right, click on share, then share my screen. Okay, and that will be this one. So this is my account, and of course, this is the trade I placed on Monday. Unfortunately, I left the trade to just wander. They were all in profit, okay, but unfortunately, right now, only one of them is in profit, Euro AUD. Now, that Euro AUD was a trade that was called by, since Monday, I've not even visited this account. Okay, very funny, right? I've been busy doing other things. Like I said, it's just a practice account. It's real. Yes, it's real. But the money I put, 500,000, is just to play with. I'm not really serious about it. But though it has gone to 1.2 million, and maybe I'll withdraw it this Christmas, maybe. Still looking at it. But the reason why I say I play with it is because I have other accounts that I'm also playing with. Okay, this one is just one of those play accounts. Okay, this USD card. I actually thought, I think the last time we discussed, maybe Monday or so, we discussed that I thought that it was going to come down before it begins to move up, but it's beginning to move up ferociously, right? One direction only. Now, when price is like this, don't worry, it will crash. Okay. So if you have a trade on USD card, maybe a sell, and the thing is beginning to go against you, I always say, don't worry. Okay. It will eventually crash. Now, let me give you an idea. You see this USD card now, for example, we are still in a preamble class, so we have not started analytic seriously. But because I'm still, looking at my charts and all that, so let me see if I can just click on this. And then you see this low. I see this low, everybody, this particular low. Since the price is close to that low, what the price will most likely do is that it will, touch this zone. Most likely, if it is going to continue to push up, it will most likely touch this low. Okay? And that low will serve as a resistance. Strong one, strong resistance. So what you can do is to go ahead and put your sell limit around that low. Now, I'm on 1 hour chart, H1. We all can see it's USD card. And what you can do also is to put your chart on USD card. Now, then you now zoom out. Very important. Especially if you are using laptop, can you see this mirror plus? This one that I'm clicking that is making the candle big. Click on the one that makes the candle small until you cannot click on it again. Then your chart is now completely zoomed out. And of course, you'll be able to see this zone, this green zone, this zone. I don't know if I can just click this and drag it. You see this zone? That's a low, okay? And of course, when the price was going to, descend, it actually broke a neck here, and of course, it descended so low ferociously. So if it's going to go up now, it's going to meet that same neck, most likely, and then begin to crash. So what I would naturally do is to put my sell limit around this zone. So you can do the same, whether you are using phone or laptop, it doesn't matter. Okay, you can do the same. So especially if you're using phone, you put your chart on, just squeeze your chart very tiny on 1 hour. Then you put your phone on horizontal, the one they call landscape. And of course, you'll be able to see what the laptop is seeing. And of course, you'll be able to put your sell limit. And of course, that sell limit should be between the region of 1.3778 and 1.3805. That should be the sell limit area you should be looking at, because that is most likely the area that the price will get to and begin to crash. Now, what do you call it now? CPI has come and gone. And of course, what we're expecting now is another FOMC, right? Which will be coming out. Let me just use that opportunity to share my screen on Forex Factory so that all of us can also see that one. So let me go ahead and share this. I'm going to be checking your comment section shortly, but let me just share this one very fast. So I'm going to click on Forex Factory, and then we can look at facts, not fiction, right? So today is Friday, and the only news that's coming out from USD is PPI. But let's quickly look at next week. Okay. Next week, Wednesday, pound, Thursday, USD retail sales, and of course, Friday, retail sales. So let's look at the week that will follow that one. Okay. That's the week of October 20 and the rest of them. So Wednesday, card event, and of course, Thursday, USD flash sales and all that. So I'm still looking for when we're going to have that rate statement. That's the FOMC rate statement. Let's look at Wednesday. And this should be October 30. I'm still looking for something. I want to see when we can be very sure that the price will descend so ferociously. That's the type of fundamental now. I'm still looking for Thursday, USD unemployment, and of course, Friday, no farm payroll. Okay, so then let's look at the week that follow, maybe November. I'm still looking for something. Don't worry, I'm going to give you a hint once I get to what I'm looking for. Okay, pound. Okay, yeah, so that's what I'm looking for. So by November 7, that's about 1 month time. 1 month time. You should expect that some of these things that I'm trying to highlight now will happen. So I'm not saying that between now and November 7 that the price will not drop. The price may drop technically, okay? But if it doesn't now drop eventually by November 7, you should expect that USD will most likely lose value, because whether you like it or not, they're going to be also looking at a way to cut the rate. Once they cut the rate, like I said before, USD will definitely lose value. I think I've mentioned this in this forum before. All right. So that said, let me just quickly look at the comment section while I still continue to welcome all. Okay. So Moji said, welcome back. Somebody he says too much money. Well, if you say too much money, well, I claim it. It says too much money. So the problem is how to spend it, Abby. Now, is it advisable to have multiple accounts? Chinedu Osagi is asking. Chinedu, if you don't have multiple accounts, what do you gain? You need to have multiple accounts, Chinedu. Okay, especially when you are into this game. Like me, I'm into it 100%. Okay, you may be into it maybe 10%. I mean, you have other things you are doing, right? You have other businesses you run. So I can say you are into trading 10%, right? So it's just one account. But someone like me that, my neck, my hand, my leg, it's inside. So I have multiple accounts. Definitely, I have multiple accounts. right? Of course, it pays. Okay, so the whole idea behind multiple accounts is this. For me, while I'm still discussing this, while I'm still welcoming people to join us, I can just go back to my account and check. So the whole idea behind having multiple accounts is simple. I have this account, and of course, it's 500K starting. Now, if I have another account and I start with 1 million, I have another account I start with 3 million, I have another account I start with 5 million, I have another account I start with 7 million, like that and like that. The idea behind that is all of them cannot be doing the same thing. Okay, for example, this account that you see is the only account that I'm trading manual. Can you imagine that? The remainder of my accounts are maybe partially automated or 100% automated. So I'm good, all right? So you can have something like that because definitely you cannot be able to, personally, as a human being, it will be difficult for you to have more than 2 accounts that you're trading simultaneously manually. It will be, I'm repeating, it will be very difficult for you to have 2 accounts that you are trading manually on your own as a human being. Okay? Because once you now begin to have 1, 2, 3 accounts, and of course you are trading, okay, so it means that your mind will not be at rest, first of all. Of course, you have a divided attention because you'll be looking at this, looking at that, money. So, but when you have accounts, multiple that automate, okay, it's possible for you to actually, have multiple accounts. So, of course, you are not going to be the only one doing that. You have some other, things you send on errand to do that for you. Now, the advantage of that is the same thing as, as a Nigerian, you are familiar with, transport companies like Libra Motors, like GU, like which other one now? Degbe Line, Yari, Benin, and I think I don't know the transport company. Those are the ones that even the traditional ones that are very old. Young shall grow. You understand? Okay, those kind of companies have more than one buses on the road. The idea behind that is that as long as you have 10, 20 buses running, the profit will be coming from 10, 20 sources. That's the whole idea. Remember, the scripture says that you must have at least 7 sources of income. That's the scripture, not me. So, Ekene Dili Chukwu, the young shall grow, they already fulfill that prophecy, okay, by having more than one buses on the road. Okay, the driver that is going from Lagos to Abuja, from Lagos to Port Harcourt, from Lagos to Enugu, from Lagos to Calabar, from Lagos to Benin, from Lagos to Onitsha, and so on and so forth. Okay, so they are going to be having different income because, of course, the transport fare is not the same on all those locations. So as long as they are bringing in income from all those sources, they are fine, right? Okay, the company is good. And guess what? Because they already have that kind of, ways of bringing in money, even individuals who definitely, this company is doing well, let me also buy one bus and put under them. Okay, individuals also benefit from that. That's the advantage of having different accounts, different source of income, right? It is preached by the scripture because you can also do something like that, right? You can duplicate your account. Normal. That one is to answer the question posted to me by Chinedu Osaji. I hope that is clear. And of course, every other person here can benefit from that. Now, Rokmo Okeya sent me a message. And of course, if you want to send me a message, send it to, you will not be able to send it to the general pool, but you can send directly to me. I'll read it. Okay. I have been trying to go the AI way, but it has not been possible. How can you help me? I cannot help you. If you go to your MT4 or MT5, depending on the one you are looking at. For example, if you go to this same, I think this one is this is what? This is MT5. Okay, so if you go to, since you are looking at my screen now, if you go to experts, once you click on expert like so, all you need to do is to, once it will definitely load for you, it will load. And when you get to experts, you can browse through the experts available there or the pool, okay, of this same MT5 or MT4, depending on the terminal you're using. And of course, there are some of those softwares that are free, you can download and test before you use. You need to test before you use. It's very important to do that. Okay, and of course, you can choose to use it. It's available. Choose to use it, and of course, it's all good. So you can go that way. That's for Rockbook. Okay, yeah. Now, that said, let's quickly go into, since we have how many people? Yeah, we have a good number of people in the house now, 80 or 8 something thereabout. Now let's start analysis straight away. Before I start, I want to welcome you all again. For those people that are just joining us, okay, we're about to start Maybe I can mention one or two names again. Abasikpong. Wow, wait, oh, Abasikpongke. Oh, this is your name. It's really African, right? You almost remove my teeth. But your name is Abasikpongke Udo. You're welcome. And I see some other, quite beautiful names in the house. Ayu Felix, and Rashida. I think your name is Saidat. Okay, those are very cool names in the house. You are welcome, right? So let's continue the class now. Give me a second. Let me just fix this to ensure that nobody will be able to talk to me, right? I don't want to allow people to be able to speak until I'm done. All right. Now, let's look at, let's start with this USD card since I was talking about it now. So the USD card on the hourly chart is looking exactly like this. What can we do? Shall we buy or shall we sell? For people that are already on buy, okay, they are good to go. You can leave your trade run, of course, allow it to continue to breathe. But you should do trailing stop. It's very important to do that. All right. Okay, so move your stop loss to break even if you're already in profit and allow it to run until it hits your take profit or it reverses and hits your stop loss. But if you're on a sell, okay, if you're on a sell, and right now, as we speak, the trend is against you. If you can't uphold it, don't worry. You can still leave it to run. Okay, most likely it will reverse and go back your direction, and of course, it can give you profit. Now, if you are not on any trade, okay, you are not on any trade of USD card, it means that you are just someone like me, okay? Because right now, this account, I'm not on any trade on it. And of course, it means that you can actually still place your trade pending when the trade will execute. Call it pending order. So in this case this morning, I'm going to be painting this part. Okay. Now you can see the paint I have on the screen. So you can put your pending order in that area. So if you want to trade USD card, you would like to trade it. My analysis suggests that when price moves 90 degrees or more than 45 degrees, okay, let me do something for you guys to. Oh, sorry, let me do Control Z. Oh, Control Z, don't return it, right? Look at this, people. Let me delete this. So when you have a horizontal line like this, let's put it here, horizontal line, and then suddenly you have price moving like this, right? This is the way the price is moving right now. So what do you call this angle? This angle is definitely more than, because of course, angle 90 will be something like this. Okay, angle 90 will be perpendicular to the horizontal line, right? So this angle that the price moved right now is more than 45 degrees. Because of course, 45 degrees would be like half of 90, right? Which would be something around this region. Okay, that would be around 45 degrees if we look at it carefully. So as long as price has moved beyond 45 degrees, it means that move is not normal. We call it abnormal move. Okay, we call that means the price is volatile. Okay, so now a good move would have been 45 degrees, would have been ideal. For example, you see this move from here when the price begins to descend on this USD card from top. And then we have something like this, right? So this will be around 45 degrees. You look at it carefully, or within that range. So that move was okay. That means the price was able to travel far. But you see this move now is fake, okay? We call it fake move. All right, so it means that the price will definitely reverse. And when it wants to reverse, it will most likely reverse 100% retracement. What do I mean by 100% retracement? Let me delete this and delete the 45 degrees and delete the 90 degrees and also delete the horizontal line. Then I will now come in with my Fibonacci. So I'm going to draw the Fibonacci from where it starts to move almost 90 degrees to where it is now or wherever it is going to. So the way it is now, this price, if it is going to retrace, that means if it's going to go down, it will retrace almost 100%, if not 100%. So if it's going to go down, oh, sorry, let me not use that. If it's going to go down, it's going to go down. First of all, it will drop to 61%, like so. And then it will play again as if it wants to go back, or and then eventually to complete 100% retracement, whether you like it or not. You can write it down. This is what will happen to USD card in the near future on this 1 hour chart. So it means that you can take advantage of that now and position yourself to benefit from what the price will do. Okay, now when will it do this? When will the price do this information I'm giving you? Most likely when the FOMC is coming up. I think that's about November 7 or thereabouts. Okay, or before then, or not before that FOMC. Okay, so because that's what the price will most likely do. So what you can do now is to go ahead and put buy limit in the region I paint on the screen. All of you can do that now. I just give you like maybe 1 minute, 2 minutes to do that. Right, put buy limit on your screen on USD card, and within that range of price I give you. Right, I already painted the region. You can paint your own on the screen. It's possible. It's possible for you to paint your screen like my own. Of course, it's possible for you to actually execute trade like I'm showing you now. That is for USD card. Now, let's go to USD JPY. Now, if you look at USD JPY compared to USD card, it's something different, right? Let's go to default white. Okay, and do this. Now, you can see that the USD card counterpart did not move like the USD. Sorry, the USD JPY counterpart did not move like the USD, what they call it now? The USD card, moved. So the USD counterpart, sorry, JPY counterpart moved like 45 degrees. Okay. If we look at equidistance channel, like so, you see that the price moves or in between that 45 degrees range compared to 90 degrees. So which means that the price is on the range right now. And of course, you can capitalize on that. Okay. And the range is actually horizontal, or almost, I cannot call it horizontal. It's like in this parallel line now. So let's do something like this. Drag this up a little bit, like so. Okay. So the price is moving on the range now on this USD card. So what you can do is to see if you can make money with this range. Okay. The price is most likely going to go down the way it is now. And if it gets to this line in the future, see, if you're using MT5, take advantage of some of these tools I'm showing you. This particular tool now, this one that I'm touching now, draw a distance channel, is to draw something like this for you. Okay, you can move it to wherever you want to move it. Of course, you can draw a range, okay, for you on the chart. You can draw like a range, like parallel lines, okay, that you can take advantage of. So take advantage of some of these tools on your MT5, and of course, MT4 does not have this particular tool I'm showing you. Okay, you can take advantage of that. So in the future, we can now zoom in. All right, let's zoom in. So and see when we can place a trade on USD JPY. So now on this screen that I have now, let me just close this one so that I have a bigger screen. On this screen, you can see that this gives us a clue as to when we could sell this particular candle, the last part. And of course, in the future now, you can actually take advantage of this. So what I want you to do, or what I need you to do, is to draw something like this and wait for the price to hit either the upper channel or the lower channel. So right now, the price is in between the two, which means you cannot trade. That's what it means. You cannot trade. So take advantage of this in the future. When the price turns the upper channel or the lower channel, you can trade. And if you must do a trade right now on USD JPY, then go ahead and go to 15 minutes time frame. I don't advise it anyway. And do the same thing, right? Zoom out and do a range, okay? On the current move. The current move is sideways or almost down. So sorry, I don't want to use this paint. I actually wanted to use the equidistance channel, right? Something like this. So you do this and extend. Extend like that. Extend like that. Like that. So you get something like this. This is 15 minutes movement. Now you have this, so you can actually, draw it to whatever you want it to draw to, right? You can extend it to whatever you want it to extend to, all right? And of course, you can now begin to look out for when the price will hit the upper line or the lower line, all right? Just look out for when the price will hit this line or this Japanese yen or the lower one. So if it does the upper one or the lower one, you are good. And of course, you also check candles. It's very important to check candles to ensure that you have a bullish engulfing or a bearish engulfing, and of course you can trade. Now, some people, I must tell you, some people like me, don't like trading on Fridays, because Friday, especially on an account that will attract swap, right? Okay, I may just ignore. But if I see a very good trade, I will definitely enter it, right? So for the USDJPY, there's no good trade now. I think I just skip that. Let me check the comment section and see if somebody sent me a message. Mike is asking, tool name is actually called equidistance, line, right? Let me just show you. Is it right here? Equidistance channel. You can see it here. Under your tool, where you have arrows, crosshair, and everything, you'll be able to see it there because you can take advantage of it. Okay, you can use it on MT5. It's actually a very cool tool that you can use right there. Okay, let me check comment section again and see what question you're asking. Can this channel be used on gold? Baba, you can use it on anything. Chinedu or Saji. You are still asking. We are going to get to gold. Maybe we'll get to use it when we get to gold. And then somebody else is asking another question. Gold. Some people are already giving me what to look at. US 100 gold. I'm looking at it. Don't worry, I'll get there. Good morning. I kindly assist in analyzing USDCHF. Okay, let's go to USDCHF for wisdom. Okay, so the last discussion I had on USDCHF is this one. Okay, and based on what I've seen now, I'm beginning to think that USDCHF will most likely collapse if it crosses this level. Mark this level on your chart. Put your chart on 1 hour. I don't even need to analyze this one. Okay, I don't need to. Okay. All right. We most likely, when I say collapse, it means that it will go down. That's what I mean. So USDCHF will most likely go down when it crosses below this level on the chart on 1 hour. So you look at the last low for 1 hour. Of course, when you see it, you can now take advantage of that level. You can place a sell there. You can even do sell stop if you like. Some people like doing sell stop. I don't like it. But if I see a candle break below that low, I will definitely take a trade around that level. Right? You don't need to put any indicator on the chart to see this. Okay. So when the price descends to this level, you can trade. But if you want to be in a hurry, say, oh, let me place a trade by offers, you can just enter sell right now. Right? You can either do instant execution. Okay. That's it. When you believe it's actually risky to do it, or it pays sometimes. Maybe 4 out of 10 or 5 out of 10 times. This pays. I cannot say 6 out of 10 because it doesn't happen that often. Okay, whereby the price hit a resistance and of course you expect it. What I mean by resistance is now it is obvious that the price does this in recent time. Think this one. This is followed. This is actually because of the news that happened yesterday on the CPI, and because of that, the price was volatile, right? And then there was a lot of move after that, kind of like a move. Let me just do this. So since then, the price has moved like so. Let me do this. So after this volatility, the price moved like so, move down up to this level, then begin to gather strength. Let me just squeeze this to shorten this one, shorten this one, shorten this one, and then delete this one. Without it. Okay, let me just use horizontal lines for that one. So what I mean is that if the price break down low, it can go down. So because between this volatility period, the price has moved up to this level, moved down to this level, then begin to show candles that push up, push up. And this was the first time the price will return to this resistance. Now, this red line crosses below the black line, signaling that the price may go down. Not that the price will go down. See, there's a difference between may go down and will go down. Will is a strong word. May is probability. So as long as this red line leaves or trade below the black line, it is a signal on this 1 hour chart that the price will go down. Now, the price begins to push back up, and when it met this red line, the red line is the first resistance. Okay, maybe I can just label that. For those people, I actually like using this particular indicator. It's simple but very effective. All right, it's been tested and proven that it works. Okay, let me pick T and type R1. I don't know if I can just do that. Okay, for those people that like following my lead, you can just enter a sell. We are still waiting for the price to break below the red line horizontal that I put there. Let me see if I can just type first resistance in capital. Okay, the red line here serves as first resistance to this price. This is the first resistance, this red line. Now, the second resistance is the black one. Okay, let me see if I can just copy this. Oh, you mean I cannot copy? What do you mean I cannot copy? Right. So let me drag this to the upside and rename it second resistance for us to see properties. Second resistance. Sorry. Second resistance. Second resistance. Right. So let's do OK and delete this. Right click. Sorry, right click and delete. Okay, so the red line here is the first resistance and this the black line is the second resistance. Now, when the price was volatile in this region yesterday because of the FOMC, the price begins to trade, printing these candles and printing more candles in that region. Right, let me squeeze this a little bit smaller. So the price was printing these candles and printing these candles. And eventually, when it was printing, I think this candle, the red line crossed below the black, like play. And then the price begins to descend. Now, when the red line, see, picture this. Anytime the red line crosses below, like so, what it means is that there is a force, like, and I don't know if some of us that did maybe physics or geography in school, we understand something we call kind of like when you exert a force on an object. Okay, so there's a force that these two lines that crosses each other, we exert on the price. Because remember, the price, sorry, the averages, whether the red or the black, is a derivative of price. It is actually the price that determines that average. Okay, it's actually the price that determines what the average will be. So now that the averages are crossing, it means that there's a force that will be exact on this price to push them down. Now, you push them down to this last candle, printed green here. What it means is that if, at this level, if the candles are not printing lower than the green, what it means is that the force exerted by these two lines is very limited now, very small. But what the price will do is that the price will begin to push back up because it is now looking for what? It's not looking for the resistance. Okay. Now, when it pushes and it printed and it printed and it got to the first guy, the red one, you can see that there's a rejection. So that means that the red line have internally some forces that it is using to resist the price from going up. Okay, so most often than not, what will happen is that the price will expect the first one and go down. But sometimes it's not so. Sometimes the price will exert more force on the red line and break above the red line and approach the black. Okay, the black will now serve as second resistance to the price. It's a litmus test. Now, if the price is able to break above the black, what will eventually happen is that the price will begin to go up. And that's what you see, for example, in this instance here, when the averages crossed, the price was still going up. But then when the averages crossed at this level, there was no much force to push the price to the upside. So what the price did was that it placed around and waited for the averages to get close. And guess what? When it descended on the red line was able to resist the price and support it enough to push it to the upside. And that was what you see that resulted in this one. And opposite is actually playing out now. And you can see right now that I think my trade is a profit. We can just check it. That's the trade I just placed now, almost a profit. That's USHF for sell. Now, somebody is raising hand. I don't know what you mean by raising hand, but we can look at what your answer could be. So maybe I can just allow you to speak to me. Matthew, what's going on? Speak to me. Matthew, I unmute you. Unmute your mic and talk.
Good morning, sir.
Good morning, Matthew.
Yes, sir. Please, I need your contact after the actuals.
What?
I need your phone number, sir.
My phone number is 090 20398739. It's not hidden.
Please come again, sir.
090.
Okay.
23
39.
Not 23.
Okay, 39.
Not 23. Let me start it again. 090.
Okay.
0.
Okay.
39.
Okay.
87.
Okay.
39.
39.
Yes, that's my phone number.
Okay, sir.
Now, don't call. Okay, just send me a WhatsApp message I'll grab it, and of course, I'll respond to all your requests.
Okay, sir.
You're welcome. Is that all?
Yes, sir.
Good. I know that every other person here would have benefited from that information I just passed across. Now, for the person that asked question on analysis on USD CHF, I hope this is clear enough. I hope so. And this analysis I just give to CHF holds true for any instrument you trade on the chart. You can name it, whether it is gold or indices or commodity or crude oil, anything. This analysis holds true. If you put these two averages on your chart, you can do the same analysis. Anybody can do this analysis. Now, what I normally do is that in this instance, all right, when the averages crossed on this left side, let's paint this part for people to see. When the average is crossed, what I would do naturally is to wait for the price to break above the resistance zone. You see this price, this zone I painted is a resistance zone because price was playing around it. So what I would do is naturally to wait for the price to close above this red line. Once it close above this red line, I will place a buy. That's what I normally do. Okay, and of course you can do the same, okay, which is opposite right now for the current event that is happening on USD card. Let's go back to here and extend this, all right, for people to see it. So I normally will wait for this price to close below this red line that I have below. Okay, let me delete this up one so that we will not confuse it with the lower one. So normally I will wait for the price to close below this level, and of course I'll place a sell. But like I said, sometimes the price will obey the first resistance and go down into profit. Most often than not, it will not obey, right? And that's what you see that's giving back to what we are currently seeing on the screen. So I hope this is clear to everybody. I hope so. If it is clear to you, please give a thumb up or say yes. I'll see it. If it is clear to you, just give a thumb up, okay? Of course, I will see. Thank you very much. Precious Ahusi. So I don't want to call you Precious. It's better I call you Ahusi. Ahusi. I hope this Ahusi or more name deal. Yeah. Okay, thank you very much. Sorry, I cannot pronounce that name. I'm sorry about that. All right. So let me see what people want to look at. Gold. Now let's quickly go to gold and look at what gold is saying. So, like I said before, I think the last discussion I had of this was that I expected gold to cover this green zone, right? I expected gold to cover this green zone. Unfortunately, gold did not cover it, all right? And like I always say, gold is not being technical right now. Technical is not anything for gold, right? Everything gold is doing is 100% fundamental, right? So I would rather be looking for a way to, based on analyst opinion. You cannot get analyst opinion in this channel. I have my own group, okay, that I belong to, kind of like a privileged group that give me kind of a hint as to what price we should do fundamentally. Analyst opinion suggests that gold could push to $3,000 in the near future. Okay, and if it is so, especially now that the rate cut is coming on board, people will fly to safety to take their money off bank in US, and of course, that dollar will most likely lose value. So gold will continue to, be a favor or benefit from the rate cut. Right? If it is so, it means that gold will continue to push forward. Now, let me just quickly see if I can put breakout strategy on the screen. I think you are beginning to see an example of what I just analyzed now. The price did something like this. Let me just see. We'll just do that. So when the averages crossed here, the price descended. When the averages was crossing right here, the price was around here. So the price came back for the red one, right? Also touched the black one a little bit, and of course was volatile to the upside. So you also expect that in the future, this is just like an elastic band. If you are playing with catapults, the one we used to kill bird when we were in the village. If you are playing with it a lot, you understand what I mean. So when you extend the catapult, and then you release the stone, okay, the more you can extend the catapult, the farther the stone will most likely go. Is that not? Those people that have used that before, people to attest to that. So now now that the catapult has pushed if this is the catapult and they can push the price to this level, now this just put this price as stone or replace this price with stone. Most likely, what you do is you also expect that look as if you are picking another stone, okay? The price will most likely return to this red one, Of course, if you found favor with the red one, it will push forward. If it doesn't find favor with the red one, if it breaks it, it will go back to the black, and of course, the black will also push it. But if you break below the black, you should expect that the price will go down. That's the whole idea. Now, but because gold is what it is, okay, so I will expect for the price to return to this zone in the future, near future. And of course, you can also place a buy about it. So you can actually, look forward to, maybe I can just do this level in the future. So do this same 1 hour chart on your chart, okay, on your phone or laptop, and then look at these two lines on your phone, the 21 period moving average exponential and the 50 period moving average simple, and check when the price will return to these two. And of course, you can take it from there and you can begin to pick a buy. Remember, gold is favored to go to the upside. That's what I can, say to you on that one. Now, let me look at the comment section and see if somebody else want me to look at something different from gold. Now, thank you very much, Chinedu. Gold is buying. Hallelujah. You can also buy. Which period are you using for the EMA? My brother in the Lord, it is 1 hour period. Herculanus Odije. Okay, it is 1 hour period I prefer to use. Okay, I can also use 4 hours. Okay, and of course I can also use daily, but I prefer to actually use 1 hour for most of my analysis. Now, for Olariwaju Benga, who want me to look at US 100, and right now, Mike want me to look at oil, and Olivia want me to look at D40. Well, I hope I'll be able to do all those things. I think we still have good time to look at that. I think we still have about 20 minutes in the house to look at something. So let's start with crude oil. Okay, so crude oil, the last I discussed with you guys on this, I think I still have the painted zone on the chart. I told you that these are the resistance zone that I printed green, and guess what? I think on maybe Tuesday or so, the price got to the middle band, the middle line, because it's ended. So you can see the way it is actually respecting those zones. So what I see on this one is that what do you call it now? The gold will still most likely descend. Okay, it will still most likely go down because from what the price is currently printing, okay, if we are to go with higher highs and higher low, it's actually obeying, that, and it's actually pushing forward. But in the future, as long as this thing, then there's kind of like an imbalance in the neck that I'm seeing here. What I mean by a neck is this. If I put an arrow on this, okay, and I put another arrow on this as the head, and I put another arrow on this as a neck. So I just put 3 arrows on the screen. Neck, head, neck. Okay, so if we represent that with like head and shoulder pattern, okay, what it means is that the last neck is not balanced, is not equal to the first one. Okay, so it means that the price is on an uptrend, okay, because the second neck is actually higher. So what you can do is to most often than not, I think you just use stochastic for this one. Okay, let's try stochastic template for this one. Stochastic template. Okay, let's check with this. So I think you should just use this one because the price will most likely continue to push forward. Okay, for this particular one. Now, what you do is, I think we missed this opportunity maybe yesterday, maybe yesterday or the day before. Okay, so we have this go down, divergence, right? And then we have this go up. Where's it now? When I was going down, this one was going up, right? That's the way I see it though. So the indicators was having lower low, while the price was having higher low, okay, in that period. And now the indicator hits 20, then you buy when you see the first candle. So I think we missed this USD. I think we missed this oil. We missed the opportunity maybe on Tuesday or Wednesday. Oh, sorry, maybe on Wednesday or Thursday rather. So when it printed this green candle, we would have buy. That was the buy we missed. So in the future, right? In the future, don't sell. There's no need to sell, even though the price will drop, right? So in the future, most likely these two lines, the blue and the red that you are seeing on this stochastic, will descend. And so put stochastic on your chart on oil and wait for the price to hit, solid for the line to hit below 20. Now, it more, and in the second wave, this is like a second wave. The second wave, it must actually descend below 20. It's important for the price to, sorry, for the indicator to print into that green zone that you see, that green painted zone that you see on the screen, before you can wait for a green candle, and then of course you can buy. I think that's the way oil should be on the 4 hours. All right, so we can just go to the normal template now and check with 1 hour to see what the 1 hour is saying. We can also insert stochastic on this one. Let's just make it stochastic. Why? Since that one seems to be kind of odd what we are doing. All right, so it's not a variance with what we are doing. So let's look at this one right now. On the 1 hour front, I think it's almost the same thing. Almost the same thing. So let's wait for this stochastic to also print to the area that we're interested in. Now, it's not in the area we're interested in, so we cannot trade. So we need for this stochastic to print into this area. So hold on for oil, don't trade it yet. Okay. I think the trade you can trade now is see the USD card. Sorry, the USD CHF. All right. That's the one that is clear enough for us to do something with. Now, that said, we can now go to maybe D30 or US 100. Now, whichever I pick should be able to give you what you want. Let me check with, I've not really checked Euro USD. Euro USD is, for me, I think I'm actually interested in trading Euro USD. Sorry, before I go, let me save this template as my stochastic. All right, stochastic. Sorry, I'm just trying to save these templates so that I can use it in the future, especially for this Euro USD. Euro USD, I'm actually interested in buying that. If you're interested, you can, yeah, this is stochastic, and of course, this is also stochastic. All right. So Euro USD, I'm interested in buying Euro USD. I'm interested in buying Euro USD. I'm interested in buying it. Let's use this template. Okay, so when should I buy? Since I'm interested in buying, you see the price has actually dropped very much, right? So you should expect for the price to push back to the upside. So I think what we can do is to use, since this stochastic is not showing us anything on USD, sorry, Euro USD. So let's use the breakout strategy. So we can wait. You can see that now the price has not, sorry, the average has not crossed each other. The red is still below the black, right? The red line is still below the black. So as long as the red is below the black, you still cannot buy. So you need to wait for the red to cross. So everybody, Euro USD should present a good opportunity for you to make money. Go to your Euro USD, put these two moving averages on your chart, wait for the averages to cross, and place a buy. Guys, you can use any volume for this one. You can use big volume, like one standard volume, 0.1, 0.2, 0.5, if your money can carry it. Okay. All these people that are listening to me now, if you know your money is not up to 500, don't dare. Even if you try one standard lot of 100, or 100,000, you will not be able to place the trade. It will not run, right? So please ensure that you have enough volume. If you don't have enough volume, add to your money and make money. Okay, this could just be a deal breaker for you, because it's going to cross today, most likely today, Friday. These averages will cross. And if you want to be fast about it, go to 15 minutes. It's already crossed for 15 minutes. You can see it on 15 minutes that it has already crossed. And it's already beating the area we want on 15 minutes. So it's beating this area. It has tested this support. It has been valid or validated. It has also tested the support again. And now it has tested both supports. That's both the black and the red on the 15 minutes, and it's breaking out. So you can just, if you are interested, you can just hit a buy directly if you are using 15 minutes. But if you want to wait for the 1 hour on to cross, then so be it. That means you have to wait for the 1 hour to cross. Now, I really use 30 minutes, but I think 30 minutes has also crossed. You can see it is clear that 30 minutes has crossed successfully. So you can just quickly enter a buy. But if you're entering, make sure that you use big volume, because it could just be a deal breaker for you to give you the money you need. Now, there's something that happened yesterday on the 1 hour front. Okay, the price printed this candle. I'm going to use an arrow on it, show you what I mean. Actually printed this candle on 1 hour yesterday. And this candle is a volatility candle, has both lower shadows and upper shadows. So eventually, technically, and because it's printed green, right? And because it happened at the end of a downtrend, right? So it signifies that indecision, but the candle was just too big, right? So a lot of people would have placed a buy immediately that candle happened. But unfortunately, you see that the price actually descended after that. So most likely people would have put their stop loss here, and now the stop loss would have been breached. So most people would have been out of this market yesterday on a loss. So you can take advantage of that and come back in full force and make money. So I rest my case, but I can just, for your sake, let me go back to that 30 minutes. 30 minutes is not a time frame I trade, but for your sake, let me just click on new order buy so that you know, say, hi, it's just giving us a trade, it's not buying. All right, so you can see that I just placed a buy on Euro USD. Of course, I'm good with that. So thank you very much, everybody. While I enable this analysis, I just analyze, it's good enough for also AUD USD and all that. So can we use Stochastic for other too? Of course, you can use. Unfortunately, I did not have time to look at US 100 for those people that are asking for US 100. Let me just quickly check. Indices country, US 100. I really don't know where to go with this US 100. I don't know what to tell you, but I think it is what it is. It's not time to buy yet. Of course, you can, if you want to sell, you can sell. I'm seeing some candles that are printing. Just that I'm going to be out of this one. So there's no analysis that can tell you on this one now that is true. Okay, that is 100% true because on the D1 front, the price is up. So I'm scared of actually entering a trade on this. But if you want to, you can try maybe sell or buy. It depends on your analysis. So use the tools and the analysis I just used today. Use it as a litmus test to check if you even analyze, if you can even analyze US 100, right, on the screen, right? So do that, everybody, because I'm going to see you on the bright side today, by the grace of God. Now, let me enable the channel like I normally do for people to talk to me briefly. So if you would like to speak or ask a question on what we have analyzed, raise up your hand and let's look at it very fast. In 2 minutes, we can talk about it and be out of here. This is Ayola. What's going on, madam? Enable your channel and talk to me.
Good morning, sir.
Good morning, Mrs. Ayola.
Yes, sir. Thanks for all that you do. God bless us all.
God bless all of us.
Yes, sir. Please, I'm on a sell trade on US 100 already. Should I leave it or
When
I
did you
don't
enter
get
the
I entered, let me see it. I entered at 2030.
When? Which day?
23.
Which day?
Yesterday.
Yesterday. Are you in profit or
Yes.
loss?
I'm in loss of 19,000.
That's
20,000.
0.01.
Yeah, 0.01. I entered with 0.01. I entered at 2345.
Okay, so what you can do is to I think I'm on US 100, right? What you can do is to use stop loss now. So let's see where you can put your stop loss. Let's click check. Okay, so your stop loss should be above the high that we are seeing now. Those are the high area. Okay, just use stop loss around this zone, man. Just stop loss around this zone. And so that means that if eventually the price breach this level on 1 hour, it means that the price will continue to go up. So you can be out of that trade and be fine. Is that okay? Hello, you there? So use stop loss above this zone. Maybe since she's not hearing me, and I hope that every other person can hear me. I hope so. So let me just type stop loss. Let me type it here. Stop loss. Okay, so if she's hearing me, she can just use stop loss around this area. Okay, stop loss should be there. All right, that's what I can say on US 100. Now, let me see if somebody has raised their hand and talk to me. So, Runo Bekibele. I've never spoken to this person before. Who is this? Runo. Go ahead and talk to me, Runo.
Yeah, thank you very much. Good morning.
This is the first time I'm hearing your name and even seeing your name, Runo Bekibele. Which location are you?
I'm in Lagos, but because I work Mostly, I hardly join, but today I'm not working. That's why I can join. Thank you
Okay,
very
so
much for the analysis.
thank you. Which state are you
I guess
from?
this is something you may have done in the past, but like I said, I hardly join. You analyze the Euro USD, and I like the analysis, but how do we know when to take profit, please?
Bruno, before I tell you how to take profit, which state are you from?
Delta,
Which part of Delta?
Ugeli South,
That means you are Urobo.
Amurobo, yes.
Or is it Soko?
Urobo,
Okay, Mavo, Abina, which they call
Umairo.
them.
Well done.
Thank you very much. So now that you ask on Euro USD. Now,
Yeah.
if you take a trade now, buy, for example, your take profit could be 20, 30 pips. For example, I'm on 30 minutes. So, but like I said, I prefer 1 hour. So I'm waiting for the averages to cross. But now we are using 30 minutes as a litmus test. If you take a trade, you can take 20, 30, 40 pips, and your stop loss should be below the area I printed here. So you can use any value as your stop loss around this zone for your stop loss. Okay, your stop loss should be around this zone. Okay, then your take profit could be above the level you bought. Okay, now for the way I see it, the way I see Euro USD, if it's going to go up, right, then it will most likely test this region on top. I'm going to just make this very tiny. Sorry, I don't know what I'm doing there. I really don't know. Hold on. Hold on. Okay. All right. So I think Euro USD could just test this region. So you could put your take profit around this region, sir.
Okay, thank you very much.
So does it mean that your name is Atana Runo, or is it Atana Runo? You just
Ogeneruno.
okay, Ogene Runo. What does it mean? I
Yeah.
know he is God. So, but what Ogene Runo? What does it mean? Runo.
God has done well.
True, God has really done well. I appreciate you very
Yeah.
much. Of course, I wish you, right? So,
Yeah.
let's see if we can just talk to somebody else, one more person, and of course we close. So Runa, thank you. If Firma has been raising her hand, I want to say her hand. I hope she's with me. So if Firma, you'll be the last person to talk to me today, by the grace of God. You will not be the last person to talk to me. Right? But on this forum, go ahead and talk to me.
Good morning.
Good morning.
Good morning, sir.
Good morning.
So please, from your analysis, you said you're placing a buy on Euro USD now, right?
I just did.
Okay. So I just want to find out, looking at how far it has gone on buy, is it right for one to place a buy now, or should I wait until it drops down to the green line that you marked?
You mean on Euro USD?
Yes. Can one still go for a buy now?
Yes.
Or to wait? There was a line you draw down around 0.09.
You don't need to wait for that price to drop to that level. The price may not drop to that level in a hurry. So you can go ahead and buy now if you want to. If you are interested in trading,
okay.
Thank
you, sir.
Thank you very much.
So when can we start chatting? Because we chat, we don't get.
When can you start chatting? What do you mean chatting?
Like this chat where we text messages. If we text you, you don't see it, and we don't see.
Okay, now I don't know what happened to Zoom. We are supposed to be able to see our messages, all of us. But unfortunately, I think it's Zoom. I think it's Zoom problem. It's not. I don't know how to really resolve it because I don't work with Zoom. But of course, since we can talk, you can speak to me. So thank you very much.
Thank you,
Foma, and of course for everybody participating in this particular program today. I appreciate you all. And I'm wishing you green pips on your trade today. Okay, so we took, I think, two Euro USD and USDHF. I hope it goes well. And of course, I hope we all make money. Now, individually, you can trade on your own using some of these analyses that I just give you. If you are, attentive enough, you understand some of these strategies, and you can apply to any instrument you want to trade, whether it is Euro USD, USD CAD, USDHF, anything. Right, it works, right? Because even though sometimes it doesn't, but most often than not, it will always give you money. I'm wishing you all green pips today and always happy weekend. Enjoy your day and stay safe. Okay. Bye-bye.
Hello everyone, good morning. Good morning. Welcome to this this special training. We will not be taking time. I just want to see how many persons join us in the next few minutes. So this is 3 minutes past 11. By within the next 5 minutes. Once it's 10 minutes, let's just say once it's 10 minutes past 11, we will begin, right? You're all welcome. Okay, I think we can just start instead of keeping others waiting. Let's keeping us waiting. I expect that others will join us. Good morning once again. Welcome to this session. We decided to hold this session especially for persons who have come in to rally trade to begin trading, but are yet to begin. Um, uh, and so for various reasons which we've gathered from account officers, we found out that okay, some persons have attended training, but are yet to be able to place a trade, maybe due to knowledge, they're not confident that they know enough yet. Also, some of you have given us feedback based on some things you've had. Oh, okay, I think this is where I'm having problems. I think this is where I'm having problems. So within the next 40 minutes to thereabout, we'll try as much as possible within the shortest possible time to give us um um try and help us with information that can make trading easier. First of all, I want you to understand that trading is a journey you've just begun. Trading is a journey you've just begun. But the truth of the matter is that it's going to get better as time goes on. Because trading is very much synonymous with knowledge, and knowledge is synonymous with experience. So I mean that the success of your trade, the kind of success you're going to get in trading will begin to increase as your experience increases, and that experience is as a result of accumulation of knowledge. You understand? But that said, there are certain information that even right now you can actually work with. Certain information that even right now, as I'm talking to you now, you can work with to actually help you to be very, very profitable. You understand? Can help you to be very profitable. And these information are these are what we want to consider. How some very simple strategy that we can work with that can actually help you to be profitable in this market. We'll also talk about that, and then we'll look into the world of how to, with these strategies, how to set stop loss, and then take profit also. Right? I believe that when we talk about these things, we'll be able to get a head start. Okay. Also, what we're going to be doing, we will also try as much as possible to practice it or replicate it on the phone. Because a couple of you also said, oh, the problem is I'm not usually with my laptop. Most times I spend more time with my phone, right? So what's this one or two strategies that I'll be teaching you today, I will also show you how you can work with it on your phone, so that at the end of the day, it's something that you can go in for the rest of today, practice on your demo account, see how you understand it, see how you get it, and then you can give me your feedback, and hopefully by next week you have enough for you to start trading and for you to start doing well. So let's go to our chart so that we don't waste time. Now, please, I want to implore you, I want to encourage you, as we begin this session, anytime you need information about or you have a question. At any point in time where you have a question that you need to ask, please let me know. Okay, at any point in time you have a question you need to ask, please let me know. Okay, so let's go right into it now. What do we have? Let me share my screen. I believe I've shared my, okay, let me share my chart with us. Okay. Very good. So I believe we can see my chart, right? Let's begin with this. Now, what you see, remember we've been talking this class for people who, just started learning about trading, but they are yet to trade, due to one reason or the other. So, for the sake of this class, we'll be taking things slow. Okay, and we'll not be loading you with too much information for this class. As time goes on, you begin to learn and begin to get used to more advanced. Listen now, what you see on your chart is candlestick pattern for USD JPY, right? USD JPY. Now remember that when we look at USD JPY, it's a fusion of the dollar against JPY, right? Good. So this is USD JPY, which means that it is USD and JPY, right? Now, when we talk about trading is done via exchange, right? Trading is done via exchange. It's exchange. You understand? It's exchange. When you go to the market to buy, you exchange. That's why it's trading, because you take something for another thing, right? You give the person money and he gives you a bag. You give the person money and he gives you a pair of shoes. That's exchange, right? So you have to give something to collect something. That is exchange, right? But at the end of the day, when it comes to trading, we are doing it to make profit. So you're trying to exchange to make profit. What does that mean? It means that you're trading, you want to receive something that has a bigger value than what you are giving out. You understand? It means you want to receive something that has a bigger value than what you are giving out. You understand? That's what trading is. So and that is why when we are trading in this market, we trade in pairs. Do you understand? We trade in pairs. When we're trading in this market, we trade in pairs because it's pairs because it involves two assets. One is what we are giving out to receive the other one, right? So when we look at USD JPY, USD JPY is an instrument that we can trade on, but it is the combination of the dollar against JPY. You understand? It's a combination of the dollar against JPY. So I give somebody dollar, he gives me JPY. You understand? Or I give somebody JPY, he gives me dollar. You get the idea. So on this market, when we want to buy, if we buy USD, if I place a buy on this instrument, what does that mean? If I place a buy on USD JPY, what it simply means is that I am buying the dollar. I am buying the dollar and automatically selling JPY. That's what it means. So if I place a buy on USD JPY, what that buy means is that I am receiving what is the base currency. I am receiving the base currency and I am selling the quote. You understand? So when we take a buy on USD JPY, it means I expect the dollar to be stronger than JPY. Let me explain like this. Now, money itself could take different forms, right? Money could take different form. Money could come in form of cash, which you have in your bank, or just cash. Now, you can decide to take that cash and buy a piece of jewelry with it. You can decide to take that cash or take that money in your account and buy a piece of property. Now, what are you doing? What you're just doing is you're changing the form of that money. You're changing the form of that money. You're changing the form of that money in your account, that 1.5 million naira in your account. You're changing it from money in your account into property. That's what it means. That's what it means when you are buying that land. Now, you are doing that because you expect that property to increase in value above that 1.5 million that you bought it. That is what that's how trading is. So if that property increases in value above that 1.5 million to maybe 3 million, it means you have now made a profit of around 1.5 because you have double now. That is how trading works. That is why when you want to buy USD JPY, it's because you expect the dollar to be stronger than Japanese yen. You expect the dollar so you want to buy the dollar against the Japanese yen so that when the value of the dollar increases, you will have made profit. If you expect the dollar to be weaker than JPY, that means that you want to buy. So you expect the dollar to be weaker than JPY, you're going to sell the dollar. Sell the dollar. So that means you expect that dollar that you are selling to be weak. So you buy the stronger pair, or you buy the stronger currency in the pair and you sell the weaker. Okay, so that's what brings us here. But the whole idea is, how do I know when to buy? How do I know when to sell? How do I know when to buy? How do I know when to sell? That is why I'll come up with this particular class where we will not load you with too much information, just show you one or two strategies that you can go practice with and then try to see the results. So let me go into it. Now, to do this, we're going to first talk about support and resistance. Okay, we're going to first talk about support and resistance. How can we identify support and resistance? How? how can we identify support and resistance? Okay, so price cannot continue in one direction forever, right? The market is all about buyers and sellers. Buyers and sellers are constantly in the market. Sometimes price goes up, sometimes price comes down. Sometimes price goes up, sometimes price comes down, you know. So this support and resistance are the things that are always in place when price is going up or when price is coming down. Now, how can we tell support and resistance? Yes, we have indicators that make it easy for us to tell support and resistance. We have indicators that make it easy, but it is important that you can tell normal support and resistance from just from the chart. Okay, it's very important you can do that. Now let's try and do that. This is USD JPY on 1 hour. Now let's trace the chart. You find out that there are times when this market was going up, it got to somewhere and it came down from there. Right? There are times the market was on its way upward. Something stopped it from continuing up and it came. And when it got to that place, it went back down. So what I'm going to try and do now is, first of all, zoom in so that I can see it very well. And then we'll try together to try and mark out those points where price got to, and you know, it is the pattern changed. Right, so let's see it. Let's go together. We're just picking one point on the chart. Now let's look at this. Price was coming down. Price got here. When it got here, something made it to go higher. Right? When it came around that point again, it got there. Something made it go higher. When it came the third time, something made it go higher. So if we want to check, we can mark that zone, and we can say this zone like this is a support zone. Because when we talk about support and resistance is places on price where it limits price. It acts as a price barrier. A support is where a price zone that stops price from falling further. As market was coming down like this, something stopped it from going further. That's a support zone. A resistance zone will be somewhere that stops price from increasing. Like you notice here, price tried to go up, something pushed it down. Price came here, tried to go up, something rejected it back. So if you mark this zone, you see that it's a place that the market had a problem with. Time when market bought it, it came down. Market bought it, it came down. Got here, rejected. Got here, rejected. Got here, rejected. So this higher part is a resistance because it's stopping price from going higher. Look at this place here. Market tried to come down, but it was pushed back up. Market tried to come down, was pushed back up. Come down, was pushed back up. This is a support zone. So what I will call this, the lower, any place below price, any part that stops price from going lower. Okay, any part that stops price from going lower is what we call a support zone. Okay, we call it a support zone, right? Any place in price that stops price from going higher, any part of the market that stops price from going higher, we call that place a resistance zone. We call that place a resistance zone. So this place here, this place is a support zone. This place here is a resistance zone. Now, it's important to know the resistance zones in the market, because that would help you determine what you're doing, where you should buy to, where you should sell to, right? So I needed to do that so that we can understand. Now, the next thing we are going to do is, remember, I'm still going to explain to us how to get these things on our phone, right? So let's just begin with the system. So now, this trading strategy that I want to show us, very, very simple strategy, and it involves the use of the moving average. There's an indicator that we have. You have it on your phone, you have it on your laptop, on the MT4. It's called the moving average. Now, we can use the moving average indicator to tell the trend of the market. We can use the moving average indicator to tell the trend of the market. So let's try it. Now, to apply this moving average on my chart, I will go to Insert. Under Insert, I'll go to Indicators. I'll go to Insert. I click on Insert. From Insert, I go to Indicators. Under Indicators, I'll go to Trend. Okay. Remember, I said as this class goes on, feel free to ask any question in the chat. Just go to the chat and drop your question, please. Now, I'll go to Insert. I'll go to Indicators. I go to Trend. Once I select Trend, I will look for moving average. Moving average. So I select moving average. Select moving average. Now, once I open moving average, it will show me this box here where I have for those of us who are using phones to join this class, you can actually zoom, so that you can see what I'm showing you more clearly. If you zoom your screen, if you widen your screen, you'll see the box more clearly. You understand? So what you will notice that immediately I click on moving average, it brings out this chart box where I have things like parameters, I have levels, I have visualization. Okay, now let me explain something. For this parameter now, you will notice that under parameters, which what I have now, I have period, I have shift, I have MA method, I have apply to. Now, the way moving average works just like average. Remember when we were asked, when we used to do mean median mode? Mean median mode in mathematics, where they say to calculate the mean is just like average. And how do you calculate the average? Calculate the average by adding those numbers together and dividing. That is somehow how the moving average works, especially the simple moving average. So you would be able to add. So the moving average indicator adds the prices of different candles, adds them together, divides by the period that you selected to show you the trend. So if I select 50 period, it will be calculating the real-time average of 50 candles, every 50 candles. You understand? So for this particular strategy, we are going to use 50 period. On that period, we'll select 50. Yes. Let me make sure I'm recording this. So it will select 50 as the moving average period. Now, once you select 50 as the moving average period, you just need to, then the MA method, you can leave the MA method as exponential. Apply to, you can use close. Okay. Shift, you can either select 1 or 0, it's fine, anyone. I may now need to select the color I want, either red or how thick I want the line to be so that I can see it easily. So once I've done that, that's the only thing I need to adjust in this place. I'll just select OK. You see it? So we have OK. OK, what OK does for me is that it will now put the moving average on my chart. It will put the moving average on my chart. Now, I have the moving average. Remember that I applied this moving average on 1 hour. Okay, I applied the moving average on 1 hour. Now, I have this line on my chart. What this line is doing is to show the movement, the trend of the market. Okay, so it shows the trend of the market. So normally we believe that when the market, or when price, and price is represented by the candlesticks, when price is above this 50 period moving average on 1 hour, that market is on an uptrend. Okay, when the market or the candlesticks are above the 50 period moving average, we normally expect that the market is on an uptrend. Now, when the market is below the 50 period moving average, we expect that the market is on a downtrend. So when it is above, we see the market as on an uptrend. When it is below, we see the market as on a downtrend. That is how it works. Now, that does not mean that we immediately start buying or selling. So this is what the strategy is. First of all, on your 1 hour, you need to have you need to have 2 bullish candles close above your moving average line. 2 bullish candles. So this is what I mean. Anytime your candle touches your moving average, let me explain what I mean to you guys. So see it. At the point where your candle touches your moving average, okay? Once you get to that point like this, where your candle touches your moving average, you begin to count, okay? In all these places now, as you see, all these sides, the candle was not touching the moving average. So this is not where we start our count from. We start our count around where the market touches the moving average, right? So this is what we'll do. Once price touches your moving average, we start counting. We want to see 2 consecutive bullish candles. We want to see that immediately price touches the moving average, the market closes and gives us 2 bullish candles. Like in this case now, this is 1, 2. This is 1, 2. Why am I doing that? This candle here is the first bullish candle. And you notice that the candle closed above the moving average. More than half, more than 50% of the body of this candle is above my 50-period moving average. This particular candle you are seeing now is very different from this type. This type here. Here is very different from this type. For those of you that are using your phones, that you need to zoom in to see what I'm doing. Sometimes if I move my cursor, your screen may not follow it. So you just need to move your screen to where you understand. Just move your screen. So let's continue. Now, there's a difference between this one and this one. There's a difference between this one and this one. And the difference is simple. This one, you have look at the body of the candle did not fully form above. Like, yes, the body form above, but the bigger part of the body is below. That's not the kind of bullish candle I'm looking for. I'm looking for a bullish candle where a greater percentage of the body forms above the moving average. Okay, so this one here that I mark, this is a good example. This one that I put inside the yellow line is a good example. This is a bullish candle where there's a greater percentage of the body that formed above the moving average. Look at this one. Look at another example of the kind of bullish candle I'm talking about. Look at this one. This one, in fact, all of the body, after price touched this thing like this, all of the body of this candle closed above the moving average. So I'm saying that it has to be a kind of candle where most of the body, look at this one too. This is another example. You can see that most of the body of this candle formed above the moving average. Most of it. This one here, the next one beside it, is not a good example. This bullish candle here is not a good example. You can see that more of the body of this candle formed below the moving average. So for bullish candle, we're talking of in a buy position. What do you see to buy? You wait for price to touch your moving average. Now, once you get the bigger part of the bullish candle close above your moving average, you now need to wait to see what the next candle closes at. Immediately the next candle closes bullish. That means you now have your 2 consecutive bullish candles. Now, the second candle, it does not matter the shape as long as it is bullish. You have your 2 consecutive bullish candles. Remember that the first one closed above the body, the bigger part of the body, not the wick or the stick of the candle, the body, the bigger part of that body closed above my 50-period moving average. So I wait for the next candle to close. Once the next candle closes, but you don't have to be there on the chart. All you need to do, this is 1 hour. If you came across this chart by 1 o'clock, you know that you should check by 2 o'clock to see how that candle closed. So it's not something you have to just be on your charts and just looking. Do you understand? So you have these two candles that have closed above. So this is what we mean by consecutive. First candle, the higher part of the body closed above. Second candle is also bullish. Now, when you get something like this on 1 hour, guys, you now have your opportunity to place your trade. You have an opportunity that you can take advantage of. This one like this. When you have this kind of candlestick where you have two candles close above that moving average, you have an opportunity. What do I mean by you have an opportunity? There is chance for you to trade. Do you know what you do? All you need to do from that 1 hour, change your time frame to 15 minutes. From that 1 hour, change your time frame to what? 15 minutes. So I've already marked that place. I marked that place, so I know what we're talking about. Now, change your candlestick. Remember that on 1 hour like this, if you see it, on 1 hour, this candle closed bullish. The first candle closed above it, and then the second candle also. Right? The first candle closed above it, the second candle. So if we go to 15 minutes, these are the candles. See these candles. Now, what will happen is that we will now start looking out for a buy on 15 minutes. Remember that we saw that thing on 30 minutes. We will now start looking for a buy on 15 minutes. Anytime on 15 minutes. Okay, anytime on 15 minutes that price comes to your moving average on 15 minutes, you take a buy from there. Anytime on 15 minutes that price comes to your moving average, you take a buy from there. Okay, once again, if anytime during the course of this class you have any question, please just drop it on the chat so that I can attend to it. I will not be unmuting us so that some person might be in a noisy place and I'll not be unmuting us, but you can just drop your questions in the chat. Oh, Samuel, this one you said just now, please can you repeat it? Oh, I don't understand what you please, so that we're not really it will mean, because if that happens, it just means we're wasting time. So let me get your feedbacks as we go on. Right now, okay, so as I was explaining, on that 1 hour, once you get those two consecutive bullish candles like that, beautiful, you just go to your 15 minutes and you start watching. This is where that candle closed. Those candles that we saw on 1 hour, this is where they closed. This is the last candle of 15 minutes. So anytime price comes to my moving average, I'll take a buy from there on 15 minutes. Price comes to my moving average, I take a buy from there. Price comes back to my moving average, I take a buy from there. Okay, like that. I'll be taking buys once price comes from. Now it's now up to you. I normally do a take profit of around, when I use a strategy like this, I do a take profit of around 20 pips. I do a take profit of around 20 pips. I do a stop loss of around 10 pips. You understand? Anytime price just comes to that your moving average like this, you look out for a buy. So there are two ways to look out for that buy. Is either immediately price comes to your moving average, you just take a buy on 15 minutes, or immediately price comes to your moving average, you wait for two bullish candles again before you take your buy. It's just something. Some people are more what's the word now, more risk averse than others. Some people have the mind to immediately enter the trade. Some people need more confirmation, but that's up to you. The first thing is, I want two consecutive candles on my 1 hour above my moving average on 1 hour for me to take a buy. The first candle that broke above, I want the body to close higher. I want the body to close higher on moving average. Now, once that happens, I want to go on 15 minutes. Anytime price comes to my moving average on 15 minutes, I want to look out for a buy on that time. So it's either I enter a buy immediately, or I wait again for two bullish candles to form and then I take a buy. Okay, I think I have my first question. Very good. What about on MT5? Because that's what I'm using. It's the same thing. The same thing. It is the MT4 platform. So the MT5 and the MT4, once you put your 50 period moving average on it, is the same strategy. The same. You understand? So I understand you. It's the same. So that is what I take my buy. So in this case, as the market came back to my moving average, this is where it came back to my moving average here. This is where it came back. This is where, this place I marked is what happened on 1 hour. So when I came on 15 minutes, price came to my moving average here. I now watch it. It did 1, 2, 1, 2, right? I take a buy from there, target around 20 pips, stop loss of around 10 pips. You understand? So as price closed like this, 2 candles close bullish, I take my buy. This market gave me over 30 pips of profits. Market came back again to my moving average. I can take my buy immediately, or I can wait for me to get 2 consecutive bullish candles. Once I get 1, 2, this is it here, 1, 2. Not this one. No, this 1, 2 is below the moving average, so I'm not using it. I'm only using the 2 consecutive candles that appear above. So you have 1, 2. After this, like this, I take my buy. I take my buy from here. I target 20 pips. This one even did close to 80 pips. Stop loss of around 10 pips. Trust me, this is, as time goes on, as we get better in this thing, we will now start looking out for more strategies or better. But this actually works, especially if you're trading on currencies. This actually works. Let me go to phone. Let me go to the phone so that I can explain to us from the phone. Of course, remember that you can ask me questions at any time, right? So can we see my phone screen now? Okay, let me do something. Sure. I will do that. I'll do that. Okay, good. So I just want to make sure that. Okay, very good. Let me make sure I'm sharing it properly again. Very good. Okay. So, yes. Now, this is my phone, right? For the person saying M5, it's still the same thing, but okay, no problem. I'll do it. It's totally the same thing, like exactly the same thing. So I don't want you to be learning. I don't want you to look at me and saying, oh, this is MT4, this is MT. It's the same thing. It's just like an upgrade of the MT4. You understand? It's the same thing. You need to, if you don't, like, I understand, like, if you're learning and if you keep telling yourself that you'll be like, I've not learned this thing. It is the same thing. So just look at us. But yes, I'll go to the MT5. Let me just explain what I'm saying. Now, this is the same USD JPY on 1 hour, right? Now, the first thing I said we need to do is to apply our moving average to the chart. That's the first thing we need to do. Apply moving average to the chart. So what I'll do is to apply moving average on my phone, there are 2 ways. I either just tap the screen, gives me this circle, right? And then I select this F sign. There's an F sign between plus and MN. There's an F sign between plus and MN, right? Good. So all I need to do is to select. Sorry about that. Can we? I hope you can. Okay, very good. You can hear me. So all I need to do is to select that F sign there. All I need to do is select the F sign. Once I select the F sign, I can actually use it. I can use that F sign to get to where the moving average is. You understand? I can use the F sign to get to where the moving average is. That F sign is here. Once I just select it, it takes me. Can you see? It takes me to where my indicators are. So it's either I do that or I select the F sign at the top of the screen. Select it. So in this case, it takes me to this main chart. On this main chart, you can see an F plus beside it, right? See an F plus beside it. So all I'll just do is I'll just select, I'll select this F plus, right? I'll select this F plus. Once I select the F plus, it takes me to where I have my indicators. I've selected that F plus. You understand? I selected that F plus. Once I selected that F plus, it took me, let me go back again. You see the main chart here. There's an F plus beside it. Once I select that F plus, it takes me to where I have the indicators. And the first thing I have here is trend. On that trend, I have moving average. I just select moving average. Once I select moving average, it takes me to that place where I have my parameters. Remember that the period is 50, right? And then shift, I'm using 1, but it's fine if you're using 0. Method exponential. Apply to close, right? So I have 50, my period is 50, the shift is 1, the method is exponential, apply to close. Once I do that, I just select done. So I select done. If I go back to my chart now, you will notice now that I now have that moving average on my USD JPY. Okay, I have the moving average on my USD JPY. So this is what can now make me begin to make my plan. Remember that when I'm doing it, my first candle, if I want to look, if it's a buy I'm looking for, you see this bullish candle that is here, that my crosshair is on. This one now, it's not a bullish candle I'll consider. Why? You will notice that this bullish candle, the higher part of the body is below my moving average line. So I'm not using that one. You understand? Hey, the moving average, the bullish candle is the bigger part of the bullish candle is below the moving average. So I'm not using that. I need a bullish candle, if my first bullish candle to be one whereby a higher part of the body closes above the moving average. Look at this one, for example. You see the way USD JPY is buying right now. You see the way USD JPY is buying right now. You can see how it started from this bullish candle. This bullish candle here. You can see how the longer part of the bullish candle closed above the moving average. Right? Although in this case, my next candle was bearish, but I need 2 bullish candles. But I'm just telling you that even if you want to look out for a buy using your moving average and your first candle is a bullish candle that breaks above it, make sure that the longer part of that bullish candle closes above that moving average before you look out for a buy. Right? So I need to have them like that too. So in this case here, we have something like this. If you see this is 1 hour, you see this bullish candle, you can see how the first one closes well above, then the second one also. Like this, once I see it like this on 1 hour, all I need to now do is to change my time frame from 1 hour to 15 minutes. Do you understand? Once I see that kind of pattern like that, I change my time frame from 1 hour to 15 minutes. Okay, so what I will do now to explain this thing, let me mark this on my phone. I want to mark that point we're talking about my phone. If you want to mark, all I need to do, tap that screen. You will see different shapes between the option between M1 and plus. The option between my M1 and plus, you see that it is triangle, circle, and square together. So once I select that, it takes me to where it will ask me, what do you want? If it's rectangle I want, there's a rectangle shape there. I'll select that rectangle shape. So with that, I can drag on my screen to determine where I want my rectangle to be. So you see that all those things, you can actually also use them on your phone. Once I'm done with it, I tap the rectangle, it will be there. If I want to adjust it, I tap it again. I tap the rectangle again, and I can adjust it how I want. You understand? I can adjust it how I want. Okay, so that is how it works. So I've applied. So once I get those two candles that have closed above my 1 hour time frame, first candle is bullish, the body closes well above. Second candle is also bullish. That is very good. I can now go to 15 minutes from that place that I have marked. Because I have marked it now, it will be easy for me to trace it. Because I've marked it on one eye, it will be easy for me to trace it. But at the time you are doing your analysis, there will be no need for you to be looking for it like that here. So what do we do? Remember what we said. Once that has happened, anytime price comes to your moving average and gives you two bullish candles on 15 minutes, so two bullish candles, you can look out for a buy. Two consecutive bullish candles, you can look out for a buy. Those two consecutive bullish candles have to be above your moving average. Like in this case now, this is where we marked from. You can see this thing. The first candle was bullish, but the second one was not bullish. I'm not buying yet. The next one was bullish, but the next one was bearish. I'm not buying yet. Right? I need two to follow themselves. And that's what happened. It played and played. Oh, sorry. It played and played around that place until it happened. Let me show you. Very good. We are back there. So he played and played until it now gave me two bullish candles above. Can you see the two bullish candles? The two bullish candles, 1 and 2. Two bullish candles above. Now I can look out for a buy, target around at least 20 pips profit, stop loss of 10 pips. You understand? Can look out for this. So, and you can see from there, after that two bullish candle, you can see how price pushed up. Right now, as long as the market is above that your 50 period moving now on 1 hour, you continue looking for opportunities like this on 15 minutes. Anytime it comes back, for instance, it came back to my moving average here, it finally touched my moving average here, I'll look out for a buy after two bullish candles. We have two here, 1, 2. I'll look out for a buy from there. You understand? Price comes, touches my moving average, gives me two bullish candles, I buy from there, looking out for 20 pips of profit. Do you understand? So it is on that 15 minutes, I will continue tracing like that until on 1 hour, price can break the moving average to the downside. That's when I will stop looking out for buy opportunities. You understand? Very, very simple. Very simple, right? So it works like that for buy and even for sell. Okay? It works like that for buy, even for sell. Okay, so let's go back to my system and then I'll now take us to the MT5. Right, so we have seen how to take buy advantage. It is also possible for you to take sell advantage in this market. It's also very possible for you to take sell advantage of this market. Remember that the first place you're going to see the move is on your 1 hour. Right, the first place you're going to see the move is on your 1 hour. When you see it on your 1 hour, you will now go to 15 minutes. That's where you will now look to place your trade, right? So let's look at Euro USD and you see an example of the sell. Remember, I'll go to insert, I'll go to indicators, select, go to trend, select moving average. I'm moving average. Okay, someone was asking what does the shift mean? Well, the shift is not really important, but it's your when you select or put a value on that shift, you're telling the moving average where to start from. Do you understand? Where to start from. You know, whether to begin. How many plays can someone place? Well, I'm sure if you were listening to me, I'm sure I'll answer your question because I mentioned 20 pips, right? I mentioned 20 pips profit. From 20 pips profit, some people, you can even go more than that. But from 20 pips profit, you can begin to now monitor your trade if it continues. So what some people usually do, if they place a profit of 20 pips and maybe a stop loss of 10 pips, and market now gets to that their 20 pips profit, they can remove that take profit, take that their stop loss, adjust it up. You understand? They can adjust that stop loss to be taking profit for them as price is going in their favor. You understand? Yeah. So that shift just tries to do, oh, where do I start from? Should I shift one period or one candlestick before I start looking for the average? Should I shift two? So I usually leave it at 1 or 0. It doesn't really affect the strategy in any way. You understand? So I apply this to my chart. Once I apply this to my chart, this is 1 hour. Remember that if I'm trading this, I need to get 2 consecutive candles close below my moving average for me to consider a sell, and 2 consecutive candles close above for me to consider a buy. Now, look at something here. In this case here, you see this place like this. You add 2 and market still bought, right? That is, there's no strategy that works 100%. So this is a period where, okay, the strategy may have issue, but that is why we are taking these trades on 15 minutes. Even if I mark this place like this, okay, let's use this point as example before I go into the main example. September, right? So even if I mark that place and I'm looking out for a sell in this market, remember that I'm saying that, oh, this sell has happened. Once price triggers my moving average, I'm waiting for 2 consecutive bearish candles, right? So I have one here, 1, 2. So I would actually sell from here. Look out for 10 pips, look out for 20 pips profit, right? In this case, price did around 19 pips. So even on the 1 hour where the market bought like that, because I entered on a smaller time frame, you know, it will still help me to be able to look out and take some profit, even from a bad trade. You understand? And the idea is that at least 70% of the time this works. So what that means is that you'll be making more profit than loss. You understand? So by the time you aggregate everything, you find out that, oh, I entered 7 trades today. Out of those 7 trades, 2 of them hit my stop loss, but 5 of them gave me good profit. That is a good strategy. You understand? So in this case here, you had 1, 2 on my 1 hour, 2 candles, 1, 2. You have these 2 candles. So I've marked them. Now let's go to 15 minutes. Good. So these are the 2 candles. This is the point here. So from this point, anytime price approaches my moving average and gives me 2 consecutive candles, like when it did that, it did not touch it here. It didn't touch it here. It did not touch it here. Okay, it touched it here. So from here, we'll start looking for 2 candles. We have 1, 2. 1, 2. Look out for a sell from here. Stop loss of 10 pips. Take profit of 20 pips. Anytime price approaches the moving average again, as long as on 1 hour it is still below my moving average, I will count 1, 2. Set stop loss of 10 pips. Look out for profit of 20 pips. Once it approaches my moving average again, gives me 2, 1, 2. Set stop loss of 10 pips. Take profit of 20 pips. Do you understand? That is just how it works. That is just how it works. Let's go to MT5. Let me go to MT5 on the phone to explain it to us, because someone was saying, please show me how this thing works on the phone. MT5. Let me switch to my phone. Okay, let me share now. USD. Okay, share my screen. Okay, good. So please let me confirm from you guys. Can you see my screen? Can you see my phone screen now? Can you see my phone screen now, guys? If you don't know how to calculate stop loss, that means you're not done with the basic class. So okay, can see my phone screen. Okay, very good. So let me explain it to you now. Now look at this. Don't worry, Samuel Joseph, if you don't know how to calculate stop loss, just go to our website and go to our YouTube page. Go to YouTube page. Just go on YouTube, search for Rally Trade. Then just go to our website. You will see our training on how to calculate take profit and stop loss. Okay. So now this is it. Let us look for USD JPY or Euro USD just to explain to you how the MT5 works. So once I do select my Euro USD, I select chart. So it has taken me to my chart, right? I'm working with 1 hour. 1 hour is what I'm working with. Now let me show us, first of all, let me even take out, because I already have the moving average, but let me take it out here so that you can see how I did it. Very good. So this is our chart. This is Euro USD, right? Now the first thing we want to do is to apply the moving average on our 1 hour chart. Now just like the MT4, I just tap my screen. Once I tap my screen, now on the MT4, well, I think the person asking for MT5 was actually right about it. Because on the MT4, we have an F sign, but on the MT5, it is more like a Naira sign. A Naira sign with one scroll stroke. That's the one we'll select, but it's still between the plus and the monthly time frame. So once I select that, it takes me to my indicator window. Once it takes me to my indicator window, I can see the F plus by the right there. I select that F plus. Once I select F plus, it takes me to the trend. What I want is moving average. So I look for moving average. Moving average is just below Ichimoku. Ichimoku Kinko Hyo. So I select moving average. Once I select moving average, what you will notice also is telling me period. I'll make my period 50. It's already there as 50. Shift on my MT5, for instance, it is 0 that is there, not 1. Doesn't really affect any stuff. But because I used 1 on the MT4, let me still use 1 here. 1. Method, exponential method is what we'll use. Apply to, we use close. So once we are done like this, I select save. Now, once I select save, if I go back to my chart, you'll see that I already have the moving average on my chart. Now, look at Euro USD, guys. Euro USD right now is, even on 1 hour, we have 2 consecutive candles that have broken below it on 1 hour. Can you see it? 1, 2. Although the first candle, the body of the candle, it's not the larger part of the candle that closed below it. It's the smaller part. But let me use this as an example. Now, on this, once I've seen it like this, I now go to 15 minutes. If I want, I can mark those 2 candles. How do I mark them? I select my screen. You see that shape, different shapes. I select it. To now show me which object do you want to put. Favorite object, I'll select the rectangle. So if I select that rectangle, once I select that rectangle, I can put it on my chart like this. I can move it around the way I want. See that I have marked those 2 sides. Once I tap the rectangle like this, it will, it's set now. So let's go to 15 minutes. Good. Now 15 minutes, I have marked this spot. What do I do? From this place, I start watching. Immediately, I have 2 consecutive bearish candles. 2 consecutive bearish. Like right now, we have 2 consecutive bearish candles below the moving average. So in this case like this, I can actually look out for a sell. Because look at it. I already have 2 consecutive bearish candles. The first one is 1, 2, before that bullish candle. So I have 2 consecutive bearish candles. I can look out for a sell here. Set stop loss of 10 pips. Take profit of 20 pips. You understand? If we go backwards, see more examples when this happened. Remember that first of all, I need to have 2. My analysis starts from 1 hour, right? My analysis starts from 1 hour, where I get 2 consecutive bearish candles. below my moving average. Immediately I see that price has touched my moving average and I get 2 consecutive bearish candles, I can look out for that particular opportunity on 15 minutes. You understand? And that's why these things will even help you. Like, okay, look at this one now. I think this is the one we saw on the laptop. We have 1, 2. I take my rectangle and I mark it. I've marked the 2 of them. Even this rectangle, there are different ways you can edit it. You can edit the rectangle. You can decide that you want it to fill the whole this thing. Look at it. It's filling the whole candle. If I don't want it to fill the whole candle, I can just change it and remove that fill option. I can change the color. You understand? So once I have this on 1 hour like this, all I need to do is to switch to what? To 15 minutes. Switch to 15 minutes. Go to where I marked that particular candle. That's 30th of September. So 30th of September, this is where I marked it. So from this place, anytime price approaches my moving average, touches my moving average, and gives me 2 consecutive bearish candles, I look out for a sell from there. Look at it. Price touch my moving average, give me 2 consecutive bearish candles, I look out for a sell from there. You see how well price sold. Price came back, touched it, gave me 2 consecutive bearish candles here again, I look out for a sell from there. Price touch it, gave me 2 consecutive bearish candles, I look out for a sell from there. Price touch it, gave me 2 consecutive bearish candles, I look out for a sell from there again. You understand? That is how it works. Okay, this is a simple strategy that you can actually use to be very profitable. You understand? You can actually use this and you can use it to be very, very profitable, especially when you use it on currencies and any kind of currencies, euro, dollar currencies, GBP, CAD, GBP, you know. Okay, yeah, you can. Now, somebody asked a very important question. He said, can you place sell 3 or 4 times in one trade? This is very important. Now, the reason why this is, you can do this, but of course, it depends on what you're trading with. Now, let me tell us, as we're starting, it's very important that you know how to manage your risk. As you get better, you can now decide to take higher risk. Now, this is how I advise you. The number of trades you are going to place at once depends on your balance. Now, if you're someone who's trading with 100,000 naira or whatever you're trading with, I will advise you not to let your margin not take more than 20% or 30%, at most 30%. What do I mean? So let me say that I have 100,000 naira, right? And I'll place a 0.01 trade on Euro USD, for example, is 0.01 trade. Let's say that is costing around 5,000 or 7,000. Immediately I place my first trade, I check my margin. Once I place my first trade, I check my margin and see that, oh, my margin is, the margin of this trade is 5,000. Remember that my balance is 100,000 and I don't want to risk more than 20% of my balance running on trade. So if my balance is 100,000, I know that I don't want my margin to be more than 20,000. So if that trade I placed on Euro US 0.01 is 5,000, it means I must not place more than 4 trades. I can place more than it, but it may not be wise. It may be too risky for me to have more than 1 trade, so that I can conveniently hold those trades to run till they go into profit. You understand? So you can place. Now, somebody who has like ₦1 million trading this currency can definitely place much more than that. That's why we said the market is a market of volume. When you have a good strategy like this and you see this opportunity like this, if you use a very good lot size, if you have good balance and use a very good lot size, especially on currencies, Currency is not even something that someone should be doing 0.01 on. But you know, of course, it's good to move slowly and steadily. But if you catch a move like that on currency and you use 0.1, you use 0.5, especially if you have million in your account, you can catch very good move where you don't need to stay for too long, but you make very good profit. That's the trick of the business. You don't need to stay for too long. Even the 20 pips I'm talking about, there's a way. Now, you are making $10 per pip on a standard lot. Do you know that if you even get profit of 10 pips on one standard lot, that's already $100, which is around 160, 170,000 naira. So when you make something like that daily, you don't even need, when you have made that kind of money, you are out of the market. That's the advantage. You that has a bigger volume, you don't need to stay too long in the market. But somebody who has a smaller volume will be looking at the profit and say, this profit is not enough. I'm seeing 2,000. But that's my advice. You trade according to the balance you have. So yes, you can place trade 3 or 4 times in one trade, but you need to consider your balance and the margin of the first trade before you now place more trades. Except if you are somebody you're a very risky person, and you say, I have clients like that. Even me personally, I'm a very risky person. The way I trade, I'm like, see, it's either I enter or not. Let me enter here. But that's because I have some level of experience now here. And you will get to that point where you have some level of experience. But for now, and of course, we're going to teach you more strategies in here. But for now, this is how to go about it, right? This is how to go about it. You need to be very careful of your margin when you are taking positions in the market. Okay, so this is how it works. So very simple. Placing time. I'm going to place before 1 hour first. Placing time. I'm going to place 1 hour first before 15 minutes. Okay, you are not placing your trade with 1 hour. 1 hour is what will make you to now say, oh, it's time for me to look for trading opportunity. 1 hour is like the alert. Okay, so when you see, now I want to say something about time frame. There's something we used to confuse about time frame. Some people believe that if they are on 1 hour time frame and they place a trade, that trade is only going to last for 1 hour. Say, oh, because sometimes when you're talking with newbie, you say, oh, yeah, look out for a buy on Euro US. They'll say, oh, which time frame should I place the buy? No, time frame is just there to help you analyze the market. Even if you place a trade on 1 minute and you don't close it, that trade will continue to run depending on when you close it or as long as your balance permits it. You understand? This time frame we are talking about is just for you to know what the market is doing at different time. So what I'm saying is that on 1 hour is when you begin to, 1 hour is where your signal will come up. Like if you get those 2 bullish candles on 1 hour, that's when you're now saying, oh, I'm about to look out for a buy opportunity in this market. So you're not placing your buy there immediately. No, you're not placing your buy. Once you get those 2 conditions, you're not placing your buy immediately. You are saying, oh, I'm about to look out for a buy. Then you now go to 15 minutes. 15 minutes is where you will now place your trade. So when you see the strategy, when you see the bullish candle or the bearish candle on 1 hour, you switch to 15 minutes. So when the market now comes to your moving average on 15 minutes, the same thing you did on 1 hour, that's when you now place your trade. So you're not placing the trade using the 1 hour analysis. You are placing your trade using the 15 minutes analysis. You just need the 1 hour analysis to let you know what the market will do for a long time. But the 15 minutes is where you'll be taking the trade anytime that opportunity comes. Anytime that opportunity comes. You understand? So that's it. That's how it works. That's how it works. Okay. Now another thing is to be very very, how will I put it now, conscious of high impact data. That's why before you place any trade, before you go into the market, go to forexfactory.com, check what are the high impact we have today. It's possible that around when the market is around high impact, you do not want to use strategy like, because high impact can come and just scatter things. You understand? But once you see that, oh, there's no high impact around that time, oh, you can use this strategy very well. And sometimes even when the high impact comes, it can go in line with this strategy too. You understand? Yes, any other question? So I want to say that, okay, please, you're just using one moving average. If you're using two moving average, can you still use this method? Well, this strategy involves one moving average, but yeah, you can you can use two. It's just that for this strategy, I prefer to use 50 period. You understand? So this class was recorded. This class was recorded. What you just do for us is that we are going to, okay, what we will do is that before the end of today, it's 12:13. Before the end of today, we are going to upload this on our YouTube. Okay, so you can check our YouTube once it is 2 p.m. Check our YouTube, you will see moving average strategy for beginners. You understand? Check our YouTube, you will see moving average strategy for beginners. So you can go through this recording. You understand? Anizo said review or summarize strategy before closing. I joined late. Well, why don't you just go on YouTube and go through what I talked about, right? I think that's a better solution than me repeating what I've said. You understand? So it was recorded in the next 1 hour, 1 hour, 30 minutes. Just go to YouTube. You will see it. We would have uploaded it on our YouTube channel. If you are not also on our WhatsApp channel, please, let me drop the link to our WhatsApp channel for those who are not there. For those who are not on our WhatsApp channel. So George, so another thing we usually do is that on our WhatsApp channel, once the video is up, we'll just post it. You understand? We'll post it on our WhatsApp channel, we'll post the link. So in the next couple of minutes or in the next an hour tops, you will be getting it. Right. So I just dropped the link for you to access our WhatsApp channel. Make sure you do that. And then you can be notified once we drop that stuff on YouTube. But yeah, go to YouTube, make sure you subscribe and you put on your notification, because as time goes on, we'll be putting more content on YouTube, right? Especially for beginners, where we'll talk about take profit, stop loss, how to use your mobile phone, how to, all those things are there. Okay, guys, so please, you need to, because the reason why we did this is a lot of us, we found it hard to start. You need to start trading. The economy is not smiling. And that is why if you have money somewhere, the money is not working for you, before you know, you have to take it out. That's why it's dangerous. And a lot of times, because of the way the economy works, people are now forced to go and take from their investment, which is not something you should do, especially in this economy. I was talking to a set of persons yesterday, and I told them the only thing I think the Naira is good for now is investing. I don't even think the Naira is good for savings anymore. And when I'm talking about investing, it's not investment where you put money somewhere and they promise you percent. It's trading, where you use your own skill to trade. Because every Nigerian now needs at least 5 times more Naira than what is earning. Every Nigerian now, 5 times more than what you were earning last year is what you need now. Just check the price of goods and services, even as you approach the end of the year. So please, that money you have in your account that you have not done anything, your trading account not done anything, you are missing opportunities. Okay, take the bull by the horn, go through this, reach out to your account officers. If you have feedback, you watch it, you don't still understand, reach out to them. They will give you the feedback that you need. You understand? So please, okay, so at least within next week, you can tell yourself that you're conveniently earning at least 5% on your trading capital daily. You can do that with this strategy. Because as you check Euro USD, that's how you check GBP USD. You check USD JPY, you check USD CHF, you check GBP CAD. By the time you check all those instruments like that, you will see at least 7 to 10 opportunities in a day that you can take advantage of. You understand? So let us get it running, so that at least next time you're hearing from me, you tell me, oh, Samuel, thank you. I've been able to at least make some small money, and then we can now go to the advanced stage together, right? So thank you so much for your time, guys. I want you to understand that the time that you put and the data that you put into this class is also part of the investment, and it is my hope and my confidence that at the end of the day, all this will begin to yield good results. Okay. Wish you a very wonderful weekend ahead. Thank you. Bye for now. Samuel, my namesake. Thank you.